What if the most dangerous threat to a celebrity empire wasn't a scandal, a lawsuit, or even public backlash, but a quiet envelope sent through the mail? No flashing sirens, no courtroom cameras, no dramatic announcement. But before we continue, please subscribe and turn on the notification bell for updates. Just paperwork. Because in America, reputations don't always collapse with a bang. Sometimes they unravel line by line, box by box, signature by signature. And that's where this story begins. Not with a rumor, not with a headline, but with a question that, once asked, refuses to go away. Why would the Internal Revenue Service take a closer look at Archewell? And why would that scrutiny suddenly collide with Hollywood money, a Netflix power broker, and whispers so extreme they border on the unthinkable? Let's slow down for a moment. Brief, because this isn't just another celebrity controversy. This is a story about how power works when fame, money, and federal oversight intersect. A story about perception versus documentation. A story about how fast narratives can flip when trust is placed under a microscope. And most importantly, it's a story about timing. Because none of this is happening in a vacuum. Right now, the IRS is under pressure to crack down on nonprofit compliance. Streaming giants are bleeding billions and quietly reassessing deals that once seemed untouchable. And the public? The public is tired. Tired of being told that every glossy foundation is automatically virtuous. Tired of headlines that promise transparency but deliver confusion. So when Archewell's name began circulating in connection with an IRS inquiry, it didn't land softly. It landed like a crack in glass. At first, it was subtle. A mention here, a question there. Online speculation mixed with half-understood documents. Most people scrolled past it. After all, celebrity charities get questioned all the time, right? But then something strange happened. The questions didn't fade. They multiplied. And as they did, another name entered the conversation. A name that doesn't trend on social media. A name that doesn't do interviews. A name that rarely gets dragged into controversy. Ted Serandos, Netflix's co-CEO. One of the most powerful figures in modern entertainment. A man whose decisions can greenlight careers or quietly end them. Suddenly, two worlds that rarely collide were circling the same story. Federal oversight and streaming economics. Tax law and prestige contracts. Nonprofit filings and Hollywood compensation. And that's when the narrative shifted from, this is probably nothing, to wait. What is actually going on here? Because here's the uncomfortable truth most people don't like to talk about. Charities built around celebrities don't just raise money. They raise expectations. They raise scrutiny. And they raise a simple but brutal question. Are they operating to the same standards they promote? That question alone doesn't imply wrongdoing. But it does invite examination. An examination is where things get complicated, especially when public silence replaces clarity. You see, the IRS doesn't move like social media. It doesn't clap back. It doesn't issue dramatic statements. It doesn't correct rumors in real time. It observes. It requests. It waits, which creates a dangerous vacuum. Because when official channels stay quiet, unofficial ones get louder. And that's exactly what happened here. As the weeks passed, online speculation escalated. Commentators began stitching together partial documents, anonymous tips, and second-hand claims. Some asked reasonable questions. Others jumped straight to conclusions. And a few crossed into territory so extreme that even seasoned observers did a double take. Words like investigation were used loosely. Then audit. Then probe. And finally, the most explosive word of all began circulating in certain corners of the internet. Arrest. Let's be clear, right here, right now. There has been no official public confirmation of any arrest. None. No mugshot. No court appearance. No federal press release. But the fact that such a rumor could gain traction at all tells us something important. Not about guilt, but about credibility. About trust. About how fragile reputations become when transparency feels incomplete. Ask yourself this. Why would people believe something so extreme so quickly? Is it because of evidence? Or is it because of exhaustion? Because the modern audience has seen this pattern before. A powerful figure. A polished brand. A charity framed as benevolent. And then, quietly, questions emerge that don't have simple answers. And when answers don't come, imaginations rush in to fill the gaps. That's how narratives spiral. That's how stories metastasize. And that's why this moment matters. Not because it proves anything, but because it exposes how quickly perception can outrun facts. Now let's talk about money. Because money is where idealism meets reality. Netflix, like every major streaming platform, is in a recalibration phase. Subscriber growth has slowed. Shareholders want discipline, not prestige. Deals once justified by cultural buzz are being re-examined with brutal math. In that environment, every contract becomes a question. What did we pay? What did we get? And what happens if the optics change? So when reports surface suggesting that a high-level Netflix executive might be reassessing compensation tied to Meghan Markle, people paid attention. Not because renegotiations are rare, but because of the timing. Why now? Why alongside IRS questions? Why as public narratives grow more volatile? Coincidence is possible, but coincidence doesn't stop curiosity. And curiosity is the engine of this entire story. Because once you start pulling at one thread, others come loose. Archewell itself becomes a focal point, not as a villain, not as a hero, but as a structure, a nonprofit organization operating under specific legal requirements. Filing forms, reporting revenue, disclosing expenditures. Unsexy, technical, boring, until it isn't, until a deadline is missed, until a filing is amended, until a form raises more questions than answers. Most people never read IRS Form 990s. They're dense. They're technical. They're intimidating. But to regulators, they're everything. They tell a story, not of intentions, but of execution. And when that story doesn't line up cleanly with public messaging, scrutiny follows. Again, scrutiny is not guilt. But scrutiny changes the game. Because once scrutiny enters the picture, every decision is reinterpreted. Every silence is analyzed. Every partnership is reconsidered, including entertainment deals, including charitable branding, including personal credibility. And that's where the emotional core of this story lives. Not in accusations, not in conclusions, but in uncertainty. Uncertainty is uncomfortable. It frustrates supporters. It empowers critics. And it creates space for rumors to thrive. Which brings us back to that word again. Arrest. Why did it stick? Why did it spread? Because it taps into something primal. A desire for resolution. A craving for a clean ending. Heroes or villains. Innocent or guilty. But real life doesn't work that way. Especially not when federal agencies are involved. The IRS doesn't rush to punish. It builds cases slowly, methodically, often invisibly. Many inquiries and quietly. Some result in fines. Others in corrected filings. A few escalate further. Most never make headlines at all. So if this story does have an ending, it won't come quickly. And that's what makes this moment so dangerous for everyone involved. Because reputations can be damaged long before facts are settled. And once damaged, they're rarely restored to their original shine. So ask yourself this. If nothing improper ultimately occurred, will that matter once the narrative has already hardened? And if something did go wrong, even accidentally, how much accountability will the public demand? These are not questions about law. They're questions about trust. Trust in institutions. Trust in celebrities. Trust in charities that promise change. And trust, once shaken, is difficult to rebuild. As we move forward in this story, we're going to do something most headlines don't. We're going to slow down. We're going to separate confirmed processes from speculation. We're going to explain how IRS inquiries actually work. We're going to unpack how Hollywood contracts really function behind closed doors. And we're going to examine why silence, in moments like this, can be both legally smart and publicly disastrous. Because the truth, whatever it turns out to be, is almost always more complex than the rumor. And the first crack didn't come from a scandal. It came from a document, a form, a deadline, a question quietly asked. And once that question was asked, there was no taking it back. Because what came next didn't explode overnight. It unfolded, slowly, methodically. And the first warning sign wasn't money at all. It was paperwork. And that's where we're going next. It started with a simple idea. A charity designed to uplift, to inspire, to make the world a better place. At least, that's what the public was told. But when Meghan Markle and Prince Harry announced the launch of Archewell, it wasn't just another charity. It was an event, a spectacle, a carefully staged declaration that their mission would combine compassion, activism, and influence. Cameras flashed. Headlines screamed. Social media erupted. Supporters celebrated. Skeptics rolled their eyes. From the very beginning, Archewell was different. Not because of its goals, but because of its founders. Celebrity, by nature, magnifies everything. Every success seems extraordinary. Every misstep becomes a headline. And every decision, no matter how small, invites scrutiny. So what made Archewell special? It wasn't just the name. Archie symbolized origin, the beginning of something new. Wells suggested abundance, generosity. Together, the brand promised depth, authenticity, and impact. But branding, as anyone in Hollywood knows, is only part of the story. The real challenge lies in execution. The irony is that the very fame that brought attention to Archewell also put it under a microscope that most nonprofits never face. Most charities operate quietly, behind the scenes, filing their forms, issuing annual reports, and slowly building reputations. Archewell, by contrast, had the world watching from day one. Every partnership, every donation, every social media post was dissected. Every phrase could be spun into praise or criticism. And yet, despite the attention, the work itself was no small task. Running a nonprofit is complicated. There are legal filings, governance responsibilities, and compliance regulations that must be followed meticulously. Miss one requirement, fail to submit one document, and even the most well-intentioned organization faces consequences. Which brings us to the heart of this story, paperwork. Yes, paperwork. Tedious, invisible, unglamorous forms that most people ignore. But forms that, if mishandled, can trigger inquiries, audits, and in some cases, accusations. For Archewell, the paperwork wasn't just an administrative chore. It was the first thread in a web that would eventually entangle the organization, its founders, and even high-level business partners. Here's where things get interesting. Archewell wasn't just a charitable foundation. It had media ambitions, a production arm, partnerships with streaming platforms, programs designed to tell stories and amplify voices. In theory, this combination could create a powerful synergy between social impact and storytelling. In practice, it introduced complexity that many nonprofits never experience. Think about it. When a charity produces content that generates revenue or partners with entertainment companies, suddenly the lines between mission and business blur. Taxes, reporting, contracts, and legal obligations all intersect in ways that are confusing, even for professionals. And when those lines are blurred under the glare of celebrity, mistakes or misunderstandings don't remain private. They become headlines. The public rarely sees this side of charitable work. What they see are glossy announcements, inspirational videos, and well-crafted narratives. They don't see the internal discussions about budgets, legal reviews, and compliance deadlines. They don't see the pressure of balancing public perception with operational reality. And they certainly don't see how quickly a small oversight can snowball into a major inquiry. Archewell's story isn't unique in that regard. Many nonprofits founded by celebrities encounter similar challenges. The combination of wealth, fame, and ambition creates opportunities and risks. But the stakes for Archewell were higher because of who was watching. The royal connection, the Hollywood network, the constant media scrutiny, it all amplified the smallest issues into potential crises. And that's precisely what happened. From the outside, everything seemed perfect. A mission-driven organization with high-profile projects and partnerships. But inside, the mechanics of running a nonprofit, coupled with ambitious media deals, created pressure points. Pressure points that would later attract attention from regulators, partners, and the public alike. It wasn't a scandal. Not yet. But it was the kind of environment where scrutiny was inevitable. Where questions about finances, reporting, and oversight could grow louder and louder until someone outside the organization began to take notice. So when whispers began about IRS inquiries, contract renegotiations, and executive reconsiderations, it didn't emerge from nowhere. It grew from the intersection of fame, ambition, and bureaucracy, from the collision of a global brand with the reality of federal oversight. The lesson is simple but uncomfortable. A charity's success is measured not just by its intentions, but by its operations. And when operations are scrutinized under a microscope of fame, even small imperfections can appear enormous. Yet the story of Archewell's early days is more than just paperwork and scrutiny. It's a tale of ambition, of desire to create impact, of navigating a world where public perception is as powerful as reality itself. It's about the tension between image and substance, between narrative and compliance, between hope and accountability. Ask yourself this. If you were running a charity with the world watching, would every decision feel magnified? Every misstep amplified? Every delay scrutinized? That's exactly the pressure Archewell faced. And this pressure, combined with other factors, the media deals, the high-level executives, the regulatory requirements, set the stage for the next chapter. Because what happens when scrutiny meets ambition? What happens when every decision is analyzed, every form questioned, every partnership re-examined? The answer is complicated, and the fallout can be unpredictable. Which brings us to the first significant thread that would unravel in this story: the interaction between charitable intentions and regulatory oversight. The tension between Hollywood contracts and nonprofit governance, and the subtle but powerful role of perception in shaping outcomes before facts are even established. By the end of this chapter, you should understand one thing. Archewell's launch wasn't just the beginning of a charity. It was the beginning of a story where fame, finance, and federal oversight would collide in ways no one could have fully anticipated. And just as the first red flags appeared, seemingly small, almost invisible, the stage was set for a series of events that would test the boundaries of public trust, celebrity influence, and the legal frameworks that govern nonprofit organizations. Because what came next wouldn't explode in headlines immediately. It started quietly, subtly, with questions, not accusations, with forms, not arrests. But those quiet beginnings were exactly what made the eventual scrutiny so unavoidable, so intense, and so dramatic. And that leads directly to the next chapter. What happens when the IRS comes knocking and the quiet questions become impossible to ignore? The phone call didn't need to be dramatic. There were no flashing lights, no loud knock at the door, just an envelope, a letter, a formal request. That's how the IRS operates, quietly, methodically, without fanfare. But make no mistake, when the IRS comes knocking, even a subtle inquiry can feel like a storm cloud hanging over your head. Many people hear IRS inquiry and immediately think of criminal investigation, handcuffs, or headlines splashed across newspapers. That's Hollywood. That's fiction. In reality, the IRS works much slower, much more deliberately, and often invisibly. For nonprofits like Archewell, an inquiry doesn't necessarily imply wrongdoing. It's often just a closer look at compliance, filing accuracy, and financial reporting. But in the context of a high-profile charity, even routine checks can create enormous public speculation. Let's break it down. The IRS handles nonprofit oversight through a tiered approach. First, there's the simple review, a casual examination of filings, perhaps prompted by missing forms, unusual expenses, or even public questions. Next comes an audit, which is a more detailed examination of finances, board governance, and reporting. At the highest level, there's a formal investigation, which might involve in-depth document requests, interviews, and, in rare cases, legal action. The key point? Most nonprofit interactions with the IRS never become public. They resolve quietly. Adjustments are made, amended filings are submitted, and the matter concludes without headlines. But Archewell was no ordinary nonprofit. From day one, it was a public brand, with every decision amplified by media coverage, social commentary, and the constant scrutiny of fans and critics alike. So when rumors of an IRS probe began circulating, it triggered a reaction that far exceeded the usual regulatory process. Every rumor was amplified. Every assumption became a headline. And that's the real challenge of being both a charity and a global celebrity. Scrutiny doesn't wait for verification. Ask yourself this. How would you handle receiving a letter questioning financial records when the eyes of millions are simultaneously watching your every move? Would you panic, deflect, or take calm, calculated steps? Archewell, like any professional organization, likely pursued the latter. But for outsiders, every delay in response becomes fodder for speculation, feeding a narrative far more dramatic than the actual inquiry. It's important to understand the mechanics behind these inquiries. The IRS typically focuses on several areas during a nonprofit review. First, financial transparency. Are donations being reported accurately? Are expenditures aligned with the charity's mission? Second, governance. Does the board of directors maintain proper oversight? Third, compliance. Are deadlines met, forms submitted correctly, and legal requirements observed? For a high-profile charity with multiple revenue streams, including media deals, this process can be intricate, time-consuming, and easily misunderstood. This is where the stakes start to rise. In ordinary nonprofits, minor discrepancies are corrected quietly. But when the nonprofit is tied to a celebrity brand, every minor correction becomes a headline. Every late submission sparks outrage. Every technical violation, however trivial, is magnified. And the public often confuses inquiry with indictment, creating a narrative that pressures executives, founders, and partners to act defensively, even when the law doesn't demand it. Let's pause for a moment and imagine the situation inside Archewell. The team receives a letter from the IRS requesting clarification on a form or a transaction. Their legal and accounting departments dive in. They analyze, cross-check, and prepare a response. In any ordinary scenario, this would be routine. But the surrounding media storm changes the calculus entirely. Every word in the response could be leaked, misinterpreted, or sensationalized. Every adjustment could be spun as confirmation of wrongdoing, even if it's simply good compliance practice. Then there's the psychological factor. For the founders, receiving such scrutiny, even if routine, can feel deeply personal. After all, this is their vision, their brand, their name. When the government's gaze falls upon it, the sense of pressure intensifies exponentially. Public figures are already balancing expectations, criticism, and internal management challenges. Adding federal attention to the mix creates a tension few ordinary nonprofits ever experience. And yet, scrutiny isn't inherently negative. In fact, it can be a tool for credibility. Accurate, thorough responses to IRS inquiries demonstrate accountability. Proper governance strengthens a charity's reputation. But here's the paradox. In a celebrity context, transparency can sometimes backfire. The more information is revealed, the more opportunities critics have to pick apart details. The more effort taken to comply, the more it fuels speculation about why such scrutiny exists in the first place. This paradox is amplified when media deals are involved. High-profile partnerships, especially with global streaming platforms like Netflix, introduce layers of complexity. Revenue streams, production budgets, compensation clauses, all of these intersect with nonprofit reporting requirements. And if an executive or board member misunderstands the filing obligations, even inadvertently, it can attract additional attention. This is why whispers of Ted Serandos and compensation reevaluations add another dimension to the story. From the outside, people see two high-profile names, a media giant and an IRS inquiry. They assume the worst. They imagine malfeasance, betrayal, and scandal. But inside, it may be as simple as contract negotiations intersecting with financial oversight. Reality, in these situations, is rarely as dramatic as rumor. But perception, especially in the age of viral headlines, can be even more powerful than reality. Think about it. The IRS doesn't announce its inquiries for public consumption. But headlines suggest investigation, speculation about fines, or even legal consequences. Audiences fill in the gaps with their imagination, which often magnifies the perceived severity. And in Archewell's case, every assumption is amplified by the celebrity factor, creating an environment where curiosity, suspicion, and intrigue feed one another in a never-ending cycle. It's in this context that the first major tension arises. How does a celebrity-founded charity navigate regulatory scrutiny without inviting a PR disaster? How do executives, legal teams, and founders balance transparency with discretion? How does one answer questions without providing ammunition for critics? For Archewell, the answers likely involved meticulous compliance, careful communication, and a delicate dance of timing. But for observers and the public, the story looks different. Every action, every delay, every clarification is framed as a choice, a strategy, or, in some interpretations, a confession. And that's where the narrative begins to spiral. By understanding the IRS's role, we begin to see the stakes. The agency's methods are deliberate, procedural, and often invisible. Its inquiries are routine, its reviews methodical. But in the glare of public attention, routine becomes extraordinary, procedural becomes scandalous, and inquiries, no matter how mundane, become fodder for speculation. And speculation, once unleashed, can't easily be contained. It travels faster than facts. It outpaces official statements. It becomes its own story. And in this case, it intersects with the world of Hollywood contracts, celebrity branding, and global media scrutiny. So when we say the IRS came knocking, it's not just a procedural matter. It's a catalyst. It's the first domino in a chain that links compliance, media strategy, public perception, and corporate negotiations. And once that first domino falls, it sets the stage for the larger drama that would unfold in the coming months. Which leads to the inevitable question: what was the first red flag that sparked scrutiny? What detail, seemingly minor, triggered attention? What document, form, or reporting anomaly made regulators pause? That is the question we explore in the next chapter. Because in stories like this, the devil is always in the details. One missing box, one unclear line, one late submission. These are rarely explosive on their own. But in combination, under public and regulatory attention, they become the spark that ignites a much larger fire. And that fire, as you're about to see, will eventually touch not just charitable governance, but media deals, compensation negotiations, and whispers of consequences that no one saw coming. It was a form, just a form, nothing glamorous, no headlines, no cameras, no dramatic press conference. But in the world of nonprofits, and especially in the world of celebrity nonprofits, one form can be the difference between normal operations and a full-blown investigation. For Archewell, that form was one small line item, one checkbox, one section of a document most people wouldn't touch with a 10-foot pole. IRS Form 990. The form that nonprofits file every year. The form that reports revenue, expenses, salaries, and governance. The form that regulators read with hawk-like precision and critics read with even more imagination. Form 990 is deceptively simple on the surface. It asks about revenue, expenses, board composition, and salaries. But behind that simplicity is a complex network of rules, deadlines, and reporting obligations. Miss a line, misreport an expense, leave a blank, and suddenly, compliance becomes a question mark. That's exactly what happened, or at least, that's what sources suggest began the chain reaction of scrutiny. Archewell, by all appearances, filed its forms on time. But somewhere in the dense accounting or in the accompanying documentation, there was a small anomaly. Perhaps a timing discrepancy. Perhaps a misclassification of funds. Perhaps an expense that was correctly made but not clearly explained. Any of these possibilities, while minor in ordinary nonprofits, becomes magnified when the organization is under a microscope. Think about it. If a small nonprofit misreports by a few $1,000s, the IRS may adjust, request clarification, or accept an amendment. Few people outside the agency would even know. But when that nonprofit carries the names of globally recognized figures, every discrepancy is instantly newsworthy. Every anomaly is a potential scandal. And the consequences, perceived or real, escalate in ways that spreadsheets and memos alone can't contain. Why does a form have this power? Because Form 990 doesn't just show numbers. It tells a story about an organization's operations, about its priorities, about how it uses funds, about its governance practices. It's a narrative embedded in a spreadsheet. And when that narrative contains inconsistencies or even areas that invite interpretation, people will interpret. Analysts, journalists, fans, critics, all will look for meaning, often before the nonprofit itself has finished its review. And that's what makes Form 990 so dangerous in the hands of a celebrity charity. A simple item that is technically correct can be misread, misrepresented, or spun into a controversy. A missing explanation can become proof of negligence. A late amendment can become evidence of misconduct. And in the court of public opinion, perception often outweighs fact. At Archewell, the filing in question reportedly triggered a quiet request from the IRS for clarification. Nothing dramatic, just standard procedure. But the ripple effect was enormous. Legal and accounting teams were mobilized. Records were double-checked. Emails were exchanged. Questions were answered. But with every clarification came a new layer of scrutiny, because for high-profile organizations, nothing exists in a vacuum. Meanwhile, observers outside the organization began to notice. Document filings are public records, after all. Curious eyes, from analysts to journalists, began examining the numbers. Comparisons were made to previous years. Social media chatter started. And, inevitably, speculation began to grow. What does this mean? Was this oversight intentional? Could it be negligence? Or worse? It's critical to understand here. In many nonprofit organizations, minor anomalies are corrected every year. Adjustments, amendments, and clarifications are routine. But in the case of Archewell, routine became headline-making. Routine became storylines. Routine became fuel for the rumor mill. So what exactly might have been on that form to draw attention? The truth is, the details are often mundane. Timing of revenue recognition, classification of administrative versus program expenses, the precise way salaries are reported. Yet each of these tiny technicalities is magnified under the dual lens of celebrity and media attention. A form is no longer just a form. It becomes a symbol, a litmus test for transparency, accountability, and credibility. And that is why, once the IRS requested clarification, the stakes increased exponentially. For an ordinary nonprofit, a simple follow-up is a footnote. For Archewell, it became a potential narrative thread in a story that the public was already hungry to consume. At the same time, the form's implications weren't limited to regulatory oversight. It intersected with corporate deals, media contracts, and executive compensation. For instance, if funds were allocated in ways that regulators questioned, it could influence how partners, like Netflix, viewed existing or future agreements. Did this form, and the questions it raised, prompt Ted Serandos and his team to rethink certain compensation arrangements? It's plausible, because when federal scrutiny overlaps with business agreements, every decision is magnified. This is where storytelling meets bureaucracy. One line on a form, one checkbox, one subtle discrepancy, and suddenly, a nonprofit is the focal point of speculation across multiple domains. Financial, legal, public relations, all converge. Every action taken in response to that scrutiny is interpreted. Every word issued in a statement is dissected. Every adjustment, however routine, becomes a potential headline. The psychological impact is just as important. Founders, executives, and staff face immense pressure to get everything right under the glare of scrutiny. The fear of misinterpretation looms. The stakes feel enormous, even if the legal reality is relatively routine. And in the world of celebrity nonprofits, stress amplifies exponentially because reputational damage is immediate, visible, and often irreversible. It is in this environment of heightened attention that the next series of events begins. The initial form, the small discrepancy, the quiet request for clarification, they set the stage. They signal to both insiders and outsiders that scrutiny is active. They invite curiosity, speculation, and, inevitably, rumor. Ask yourself, if you were a founder with the world watching, how would you feel knowing that a single form, a single line item, could ripple across your entire public image? That your intentions, your brand, and your charitable mission might all be interpreted through the lens of a single document? That is the reality Archewell faced. And that is why this story is as much about perception as it is about compliance. A simple form becomes a symbol. A procedural inquiry becomes a narrative. And one small detail on a page can spark questions that no one ever intended. But here's the thing about beginnings. They rarely feel dramatic at first. The form itself was unremarkable, mundane, and technical. But in the context of fame, media scrutiny, and high-level business partnerships, unremarkable becomes consequential. Because what came next would escalate. Clarifications would be sought. Documents would be reviewed. And what started as a single form would slowly entangle executives, partnerships, and media narratives in ways that nobody anticipated. And yet, for most of the public, it still looked like nothing more than paperwork. A few lines on a page. Completely ordinary. Until someone noticed. Until someone asked the right question. And that is when the first domino fell. The form was not just a line item. It was the spark, the catalyst, The first sign that scrutiny, quiet, procedural, but inevitable, had arrived. And that leads directly into the next chapter. How Hollywood money and nonprofit regulations collide, and why the combination can be explosive even when everyone is trying to do the right thing. The collision wasn't visible at first. Hollywood money and federal regulations are two worlds that rarely meet, and when they do, the clash is subtle but relentless. On one side, there's celebrity branding, media deals, and contracts worth millions. On the other, there's the IRS. Precise, procedural, and unforgiving. One moves fast, rewards audacity, and thrives on perception. The other moves methodically, scrutinizes paperwork, and values documentation over drama. When Archewell stepped into the intersection of these two worlds, the friction was inevitable. Think about it. Streaming platforms like Netflix operate on an entirely different clock than nonprofits. Decisions are made in boardrooms with spreadsheets, forecasts, and tight deadlines. Compensation is negotiated based on performance metrics, projected subscriber growth, and competitive pressures. For executives like Ted Serandos, contracts aren't just agreements. They're tools to manage risk and reward in a high-stakes environment. Meanwhile, nonprofit compliance is a slow, deliberate process. IRS forms, charitable allocations, and governance structures follow rules designed to ensure accountability, not profit. Timing, clarity, and categorization matter. A misstep can trigger questions or audits. The rules exist to prevent abuse, and they do not bend for celebrity status. Now imagine these two worlds overlapping. A high-profile charity raises funds and produces content. Revenue flows into media projects, sometimes tied to partnerships with streaming platforms. Executive compensation is linked to performance in those projects. Reporting to the IRS must capture all of this accurately. One misclassification, one late filing, or one unclear line on Form 990 can attract scrutiny. And once scrutiny exists, every Hollywood decision, every contract clause, every payment, every bonus, is suddenly under a different kind of microscope. This is precisely what sources suggest happened behind the scenes at Archewell. The organization's media projects were ambitious, its executives influential, and its filings public. A small discrepancy, perhaps in how revenue or expenses were recorded, would be amplified in the context of high-value deals and celebrity exposure. For outsiders, it's tempting to view this as scandalous, even sinister. But in reality, it's a procedural chain reaction. Hollywood contracts are designed to protect stakeholders, manage risk, and reward success. IRS oversight ensures compliance with tax laws and nonprofit regulations. Individually, both are routine. Together, especially when visibility is high, they create pressure points where speculation thrives. Consider executive compensation as an example. Netflix's top executives operate under carefully structured agreements. Millions of dollars are at stake, and terms are reviewed regularly. When regulatory scrutiny intersects with these arrangements, negotiations can shift. Figures like Ted Serandos are responsible not only for creative oversight, but also for corporate stewardship. Any perceived misalignment between a nonprofit's financial reporting and a media deal could prompt reconsideration of terms, compensation structures, or future commitments. Now layer on the public eye. Every nuance becomes a headline. Every rumor, regardless of verification, circulates rapidly. A simple inquiry into nonprofit paperwork suddenly becomes a story about executive accountability, celebrity lifestyle, and corporate ethics. In the minds of viewers, the narrative can escalate far faster than reality allows. There's also the matter of perception versus intent. Nonprofit leaders may have intended for every dollar to be used correctly. Executives may have intended for compensation agreements to reflect fair performance metrics. But when scrutiny hits, intent matters less than outcome. The public and the press focus on appearances, timing, and documentation. A perfectly lawful arrangement can appear suspicious if not fully transparent. This is where the tension peaks. Archewell, at the center of a high-profile IRS inquiry, simultaneously negotiating with Netflix executives over media projects, finds itself in a precarious position. Every action, from internal accounting decisions to external PR statements, carries consequences. Missteps, or even misinterpretations, can magnify rapidly. And yet, Hollywood money isn't easily slowed by bureaucracy. Streaming deals are lucrative, aggressive, and designed to move at speed. They reward initiative, and punishing miscalculations is common. In contrast, nonprofit oversight is deliberate, emphasizing precision and adherence to rules. The clash between speed and scrutiny creates natural friction, and in the case of Archewell, that friction became a narrative force in its own right. Imagine being in the executive suite. On one desk, there's a contract worth tens of millions, deadlines looming, creative projects in motion. On another desk, a letter from the IRS requesting clarification, with timelines measured in weeks, not hours. Decisions about compensation, project approvals, or partnership renewals must consider both realities simultaneously. Miscalculate the balance, and the fallout could be both financial and reputational. Now add the public dimension. Social media and press coverage act as accelerants. Rumors can grow faster than facts. An inquiry that would normally remain internal becomes fodder for speculation about mismanagement, financial misconduct, or even arrest, regardless of legal reality. The combination of Hollywood stakes and government oversight becomes almost cinematic, but the reality is stressful, confusing, and unpredictable for everyone involved. It's here that the story of Archewell truly begins to gain complexity. A form-triggered scrutiny. Scrutiny intersects with media deals, and now, financial arrangements that seemed secure are under reassessment. The IRS may simply want clarification, but executives must consider optics, contracts, and long-term strategy. The pressure is intense, multidimensional, and relentless. The irony is striking. A charity designed to uplift is caught in a tension between perception and compliance. Ambitious media projects, meant to amplify impact, introduce scrutiny and complexity. Executive decisions, intended to reward performance and protect investments, intersect with federal oversight. And the public, eager for a compelling story, interprets every minor detail as evidence of scandal. This collision is not unique to Archewell, but the stakes are higher because of visibility, celebrity, and financial scale. Ordinary nonprofits navigate regulatory oversight quietly. Ordinary corporate executives manage compensation internally. When the two worlds collide under the glare of public attention, the result is dramatic, even when nothing improper has occurred. And yet, the tension does not resolve quietly. As documents are reviewed, as letters are answered, as compensation terms are reconsidered, the story grows. Small procedural events compound into narrative threads. Analysts, journalists, and social media users interpret, comment, and speculate. Every clarification becomes a talking point. Every delay becomes suspicious. It's in this environment that rumors about executive reconsideration, compensation cuts, and even more extreme outcomes begin to circulate. And while the legal reality may be straightforward, the story in the public sphere takes on a life of its own. This is where perception, law, and corporate strategy intersect. Hollywood money does not pause for regulatory scrutiny. Regulatory scrutiny does not bend for fame. And public perception is relentless, unforgiving, and instantaneous. Which leads to the next question. When scrutiny intersects with compensation and contracts, how does it affect decision-making at the highest levels? How do executives like Ted Serandos respond? How does the media narrative influence negotiations, deadlines, and outcomes? The answers lie in the next chapter, where we explore the reported $20 million question, the reconsideration of compensation, and the subtle pressures that ripple through high-stakes corporate decisions when the IRS is involved. The number flashed across spreadsheets, emails, and whispers behind closed doors, $20 million. For most people, it's an abstract sum, impossible to conceptualize. But in Hollywood and corporate boardrooms, $20 million isn't just money, it's leverage, influence, power. And sometimes, it's a reason for pause. Ted Serandos, co-CEO of Netflix, is a man who understands leverage better than almost anyone. His decisions determine what millions of viewers watch every week, what careers rise or fall, and how billions of dollars in revenue flow through the entertainment ecosystem. When he makes a move, it isn't just corporate, it's cultural. And when his decisions intersect with celebrity-led nonprofits like Archewell, the implications are profound. So what exactly was the $20 million question? Allegedly, it involved compensation arrangements tied to media projects that involved Meghan Markle and Archewell. The rumor, or claim, suggests that Serandos began to reassess payments in light of shifting circumstances. Whether due to projected performance, scrutiny over financial reporting, or the broader intersection of Hollywood money and nonprofit compliance, this reconsideration is what made headlines and sparked speculation. Let's be clear, renegotiation of contracts in Hollywood is common. Streaming services constantly assess the performance of projects, adjust expectations, and alter compensation accordingly. Millions are at stake, and executives like Serandos must balance risk, reward, and public perception. But the presence of celebrity, charitable branding, and high-profile media partnerships changes everything. Suddenly, routine renegotiations appear dramatic, almost scandalous. Imagine the scenario. A high-value media deal is in play. Millions of dollars are contractually promised, tied to deliverables and projected viewership. A nonprofit's filings are under federal scrutiny. A media executive is responsible for billions of dollars in shareholder value. Every dollar, every clause, every payment decision is subject to internal review and external interpretation. In this environment, hesitation is necessary, but scrutiny is unavoidable. And yet, it's human nature to see conflict where there might be none. Public perception conflates inquiry with guilt, reassessment with punishment, and contractual negotiation with scandal. For observers, the narrative is simple. $20 million reconsidered, a celebrity charity under IRS scrutiny, and the executive in question. How could this not be explosive? Inside the boardroom, the situation is less dramatic but no less consequential. Serandos and his team would likely have examined multiple factors: projected content performance, alignment with corporate goals, risk exposure, and the potential optics of continuing or modifying financial commitments. Adjustments to compensation or project funding can be a matter of financial prudence, not personal judgment. But once this information reaches the public sphere, nuances are lost. Context evaporates. The story becomes simplified, sensationalized, and distorted. Consider the human factor. A celebrity-driven charity seeks to advance its mission, inspire change, and produce media content with cultural impact. Netflix seeks to maximize shareholder value, ensure content success, and manage risk. The overlap is inevitable, but tension arises when outcomes are uncertain, scrutiny is heightened, and expectations are magnified. $20 million is not just a number. It's a symbol of stakes, risk, and power dynamics. This is where emotion enters the story. For the founders of Archewell, the idea of a high-level executive reconsidering compensation tied to their projects could feel like betrayal, skepticism, or pressure. For executives, the reconsideration is a standard risk management strategy. And for the public, the story appears as conflict, power, wealth, and celebrity at odds. The narrative writes itself, fueled by curiosity, rumor, and the inherent drama of high-profile negotiations. Moreover, the timing amplified the tension. Reports of IRS scrutiny, coupled with financial reassessment, create a perfect storm. Observers ask questions. Are these events related? Did regulatory attention influence corporate decisions? Is there accountability at play? Or is this merely coincidental, procedural, and routine? One key point: most of these considerations occur behind closed doors. Emails, internal memos, and boardroom discussions are not public. What the public sees are leaks, summaries, and sometimes outright speculation. And in the absence of verified facts, narratives can spiral uncontrollably. This is the world in which Archewell found itself, one where ordinary organizational decisions are interpreted as extraordinary events. Then there's the media effect. Once a number like $20 million enters public discussion, it becomes both symbol and headline. It's no longer just a financial figure. It represents stakes, tension, and consequence. Articles question motives. Commentators speculate. Social media amplifies every angle. The result is a feedback loop. The more scrutiny, the higher the perception of drama, which in turn magnifies the impact of any further action. And it's critical to understand the stakes from multiple angles. For Serandos, His decisions reflect corporate responsibility and accountability to shareholders. For Archewell, financial clarity ensures mission continuity, credibility, and public trust. For the public, the story represents a collision of celebrity, charity, and governance, a narrative that feels immediate, relevant, and personal, even if they have no direct connection. At the center of it all is tension. How much influence does scrutiny have on financial decisions? How do executives balance obligations to partners with compliance requirements? And how do high-profile figures navigate perception while maintaining operational integrity? This $20 million question isn't just about money. It's about responsibility, risk, and the intersection of fame and bureaucracy. Every decision made in response to scrutiny, regulatory, financial, or public, carries weight. Every delay or adjustment fuels speculation. Every clarification or amendment invites interpretation. So when observers see headlines about compensation reconsiderations or media projects under review, the reaction is predictable: intrigue, suspicion, and curiosity. The human brain seeks patterns, links, and motives. In this case, the narrative seems obvious. $20 million, celebrity charity, IRS attention. How could there not be drama? Yet the reality, like much of this story, is more complex. The number itself is a catalyst, not a conclusion. It signals negotiation, evaluation, and scrutiny, but not necessarily misconduct. It represents high stakes, but the outcomes depend on procedure, documentation, and communication. And this is where Chapter 5 ends, but not quietly. Because as financial reconsiderations and media scrutiny intensify, another layer emerges. The legal, regulatory, and procedural implications that connect the nonprofit filings, the executive decisions, and the public narrative. Questions arise about accountability, transparency, and consequence. And those questions lead directly to the next chapter. The compensation controversy explained. Compensation in Hollywood is rarely simple. It's a chessboard, a negotiation, and a psychological battlefield all at once. Add a celebrity-led nonprofit to the mix, and the board suddenly becomes a stage for scrutiny on multiple fronts: financial, legal, and public. At the heart of the controversy surrounding Archewell and Netflix was the question of whether Meghan Markle's compensation, directly or indirectly linked to media projects and partnerships, was appropriate, fair, or properly documented. From the outside, headlines made it seem like a personal attack or corporate betrayal. From the inside, it was a routine corporate review, complicated by celebrity, visibility, and the overlapping roles of nonprofit and media operations. To understand the issue, we must break down the elements of compensation in these situations. In Hollywood, compensation for executives and high-profile collaborators is typically performance-based. Metrics can include viewership, subscriber retention, project completion, and content reception. For streaming giants like Netflix, millions are allocated according to projected returns, negotiated terms, and strategic priorities. When a nonprofit intersects with these media projects, complications emerge. Nonprofit funds cannot legally subsidize personal income outside of mission-related activity. Everything must be transparent, properly categorized, and justified. For Archewell, this meant meticulously tracking expenditures tied to media content, consulting legal counsel, and ensuring alignment with IRS regulations. Small errors, or even ambiguities, could trigger questions. Now consider the lens of public perception. A $20 million reevaluation of compensation linked to a celebrity nonprofit project is a story waiting to happen. Reporters, commentators, and social media users interpret numbers without context. Questions arise. Was this money justified? Was it mismanaged? Was there influence or favoritism at play? In reality, corporate and nonprofit procedures are rarely so nefarious, but perception often outweighs fact. This is where Ted Serandos' role becomes crucial. As co-CEO of Netflix, he oversees massive budgets and thousands of projects. Decisions about compensation are strategic, often influenced by corporate priorities, market trends, and risk assessment. Reassessing payments tied to high-profile projects is standard business practice. Yet when the individuals involved are globally recognized celebrities, the routine becomes controversial overnight. The controversy deepens because of timing. At the same time that Archewell was responding to IRS inquiries, Netflix executives were reviewing media deals and compensation structures. For external observers, the overlap seemed suspicious. Was the IRS inquiry influencing corporate decisions? Were executives attempting to distance themselves from potential regulatory risk? Or was this simply standard corporate due diligence? The answer is likely nuanced. Corporate executives consider risk and public perception alongside performance metrics. Regulatory scrutiny, even if routine, changes the equation. A line on a form, a minor reporting error, or a delayed filing suddenly intersects with millions of dollars in media contracts. Every decision is interpreted as a signal, every negotiation as a statement. And then there's the human dimension. For Meghan Markle and Archewell, the intersection of scrutiny, compensation, and media deals was deeply personal. Charitable intentions, media ambitions, and brand strategy all collided. From the outside, the story looked like conflict or scandal. From the inside, it was about operational clarity, compliance, and strategic partnership. The tension is a hallmark of high-profile collaborations. Perception diverges sharply from intent. Compensation controversies aren't inherently negative. They serve as checks and balances, ensuring accountability. But in this case, the narrative took on a life of its own. Leaks, rumors, and speculative reporting amplified minor procedural questions into a story about betrayal, mismanagement, and even legal jeopardy. It's worth noting that the interplay of nonprofit and corporate governance creates unique challenges. Nonprofits must document that funds are used for mission-driven purposes. Media executives must justify expenditures and manage shareholder risk. When celebrity, high stakes, and public visibility intersect, even minor adjustments to compensation become headline-worthy. The $20 million figure, while impressive, is symbolic. It represents the magnitude of scrutiny, the stakes of negotiation, and the intensity of public attention. It isn't necessarily evidence of wrongdoing, but it is enough to trigger narratives of conflict, controversy, and drama. Critically, this controversy illustrates a broader principle. Visibility magnifies routine actions. A standard contract adjustment becomes explosive when linked to a celebrity nonprofit. A procedural IRS inquiry becomes scandalous when filtered through the lens of public speculation. Ordinary operational decisions become fodder for global discussion. And yet, the procedural reality remains straightforward. Executive compensation must align with performance, corporate guidelines, and legal requirements. Nonprofit funds must support mission-driven activities. Filings must be accurate, transparent, and timely. Misalignment can invite scrutiny, but it does not automatically imply misconduct. This chapter underscores how perception and procedure collide. For Archewell, the combination of celebrity, media projects, and regulatory oversight created a narrative where routine compliance decisions were interpreted as major controversies. For the public, the story is irresistible: celebrity, money, and government scrutiny. For insiders, it is a careful balancing act, navigating legality, ethics, and optics simultaneously. And that's why the next chapter becomes critical. The ripple effects of this scrutiny on Archewell's operations, media partnerships, and public reputation. Because once questions about compensation enter the narrative, they extend far beyond the boardroom, influencing perception, media strategy, and even potential legal implications. Scrutiny rarely stops at the point of origin. Once a nonprofit like Archewell is under regulatory and media observation, every aspect of its operations becomes subject to review, analysis, and, sometimes, misinterpretation. The consequences are both internal and external, affecting staff decisions, project timelines, media partnerships, and public perception. Inside Archewell, the impact of IRS inquiries and the high-profile compensation reconsiderations was immediate. Operational teams had to ensure absolute accuracy in reporting, tighten internal controls, and prepare detailed documentation to demonstrate compliance. Every donation, every expense, every media project budget had to be reviewed meticulously. Small inefficiencies or ambiguities that might have gone unnoticed in an ordinary nonprofit suddenly became critical. Consider staff morale. Working under constant public scrutiny can be psychologically taxing. Employees may feel pressure to double-check every action, fearing that minor errors could be misrepresented externally. Internal communications must balance transparency with confidentiality. Mistakes that might be trivial in ordinary circumstances now carry reputational risk, and staff members feel the weight of the spotlight. Beyond internal adjustments, operations are affected by external relationships. Partnerships with media companies, collaborators, and donors are suddenly filtered through the lens of public and regulatory attention. Questions arise. Can we proceed with planned projects? How will scrutiny affect funding or collaboration? Will partners perceive risk if filings or compensation adjustments appear irregular? Every interaction becomes strategic, calculated, and cautious. The ripple extends to media projects as well. Timing, budgets, and creative decisions all intersect with regulatory considerations. If a project involves resources linked to nonprofit funding, executives must ensure transparency. If corporate partners have concerns about perception or regulatory exposure, adjustments may be made to contracts or production schedules. In effect, every decision becomes intertwined with compliance and optics. This is where tension intensifies. Archewell's mission: to create impact through media, storytelling, and charitable work, cannot pause entirely, yet operational agility is constrained. Every move must consider legal, financial, and reputational implications. Creative decisions intersect with risk management, which can slow processes, create frustration, and complicate internal dynamics. Externally, the ripple effect fuels public speculation. Observers notice delayed projects, revised announcements, or amended partnerships. Each adjustment is interpreted as evidence of mismanagement, even when the reality is cautious operational planning. Headlines emerge. Archewell projects delayed amid IRS scrutiny. Media deals reassessed following nonprofit inquiry, and similar narratives circulate. The public connects these dots, often without access to context or verification. Donors and supporters are not immune. They may question financial stewardship, project execution, or leadership decisions. Confidence becomes a critical asset that must be actively maintained. Public statements, updates, and clarifications are crafted with legal review, but even precise communications can be misread, edited, or amplified in ways that create unintended consequences. The ripple extends further into legal risk management. With compensation under review and nonprofit filings scrutinized, legal counsel becomes heavily involved in every operational decision. Documents are double-checked. Procedures are formalized. Risk assessments are conducted before any public announcement or partnership agreement. While these measures protect the organization, they also slow operations and increase internal complexity. And then there is perception management. Archewell, like many high-profile nonprofits, must consider the optics of every action. Public confidence is essential for continued support, media engagement, and credibility. Small operational adjustments, if misinterpreted, can erode trust quickly.